Hey, it's Deric Lipski coming to you live from inside my office. And I got this question sent in from a viewer. I wanted to go over it with you guys. When I sell my home, what happens to my mortgage? Again, my name is Deric Lipski. I'm with Keller Williams, 20 years in the business, thousands of homes sold, hundreds of five-star reviews. So the information I'm trying to create here is for sellers and buyers to try to get into the process of buying and selling a home. A lot of these times I have questions from seasoned sellers and seasoned buyers, people who've bought and sold homes before. They just kind of forget and have questions. So I want to make sure I make these quick videos in order to help you guys out. And again, if you have any questions or comments, leave them below. I try to answer everything I answer. If I can't answer it with a paragraph or so, I may create a video and then tag you in it so you can see the answer there. But this was something from one of our viewers he had. And he just goes, hey, when I sell my home, what happens to my mortgage? You know, how does that affect my credit? Where does it go? What happens with that? Okay. So number one, when you sell your house, your mortgage is paid off in full. Sometimes you actually get a check back from the bank, because even though the attorney will call ahead, get the payoff and all that kind of stuff, when the bank summarizes your account and figures out what's owed, when they send it to the attorney, when he actually pays them, they have something called per diem, which is per day. So if they get it ahead of time, there'll be extra money there, or sometimes they don't factor in a couple things, because usually these attorneys only give them a week to get it together, or a few days. So they may have forgot some escrows that they might be holding for you. So a lot of times after you sell a house, you'll actually get a surprise check from your bank and say, hey, not only is it paid off, but here's the balance that we owe you. So how does it work? Okay, number one, in order to get your mortgage paid off, you have to get an offer, P&S, and then go have a purchase price. You need to know your purchase price, because this is how it's going to work. So we know what the home is going to sell for. Number two, the attorney will receive a review it, and he'll also pull the title, the deed, and the mortgage payoff, and any and all liens that are associated with the property, whether there be a mortgage lien, a mechanics lien, or any other kind of lien on the property, or credit card bill lien, anything saved. Funny what you see on there. So in title, will have all that. So when they run title, they're going to have every lien on the property, because remember, when you sell a house to the next buyer, he wants it clear and free. He wants nothing on it besides the bank loan he's getting. He's owing any of your stuff on there. So sometimes it'll be back taxes, water bills, could be anything on there that they'll put on there. He will request payoffs from all so the attorney will request payoffs from all the people that have liens on the property. The town, the bank, any credit card company, anybody that has a lien on the property, he's going to request a payoff for that, so he can put it together. Then he's going to review. He needs it he needs it in writing from the bank. He won't take your word from it. Obviously, he's going to, you say, I only owe $200,000, and you owe $1 million. So he's going to get it directly from them. He's going to revisit the purchase price of the property, make sure you can cover everything on there. And if you can't, he's going to tell you before we do this, like, hey, you're going to have to bring money in to get out of this. Like one of the last downturn markets we had back in 06 to 010, a lot of people had to bring money in to get out of their mortgage, which was unfortunate. But again, it's like this market's like any other market, stocks and bonds. You want to buy low and sell high. And if you do the opposite, then sometimes you may have to bring in money to get out of it. He'll ask the bank for wire instructions, so he's going to know exactly what we owe him and how to pay them off. And again, it's per diem. And then at close, he will wire the funds, and then if there's anything left over, he'll give that to you and he'll call out the proceeds. And he'll have everything in writing, so you can see where every penny went of your property. Yeah, and if there's any remainders, he's going to end up getting it to you, so the bank will give it to you as well. So now what happens is, after he sends this stuff into the bank, they're going to record it. They're going to record it on the deed, and they're going to record it on your credit report. So what happens to your mortgage? The mortgage gets deleted, void, waived. Now, here's something funny that comes up, though. He has to make sure he does it so that once the bank gives the okay, the attorney has to make sure he records this. He's getting paid. He's got to record this properly, because if you have an improper discharge, your mortgage will still show up on the next, well, not for you, but the buyer, when he goes to sell, it'll still say he owes a mortgage, and really it's your mortgage. That was paid off. It just was never recorded properly, so the deed will still have it on it. So that has to be recorded on there. But anyways, I hope that question answers that answer answers your question. Any other questions or comments, please leave them here. I try to answer everything I can, and if I can, I create videos for them. Again, my name is Deric Lipski. Thanks for watching the video. I'll see you at the next one.